Ladies and gentlemen, good day and welcome to the Rossari Biotech Limited Q1 FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anup Pujari from CDR India. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone, and thank you for joining us on Rossari Biotech Limited's Q1 FY24 earnings conference call. We have with us Mr. Edward Menezes, Promoter and Executive Chairman, Mr. Sunil Shari, Promoter and Managing Director, and Mr. Ketan Sablok, Group Chief Financial Officer of the company. We will begin the call with opening remarks from the management, following which we'll have the forum open for a question and answer session. Before we start, I would like to point out that some statements made in today's call may be forward-looking in nature, and a disclaimer to this effect has been included in the earnings presentation shared with you earlier. I would now like to invite Mr. Edward Menezes to make his opening remarks.
Thank you, Anupji, and good afternoon, everyone, and thank you for joining us on our earnings call. I hope all of you had the opportunity to go through our results presentation that provides details of our operational and financial performance for the first quarter ended 30th June 2023. We have recorded a steady performance during the quarter, demonstrating the resilience and adaptability of our business model amidst the challenging global economic landscape. Our commitment to sustainable and innovative solutions has kept us in a stable position despite the current subdued demand scenario witnessed in the chemical markets. We are delighted to share that we have acquired the remaining 16% stake in our subsidiary Tristar Intermediates during the quarter, and we are now nearing the completion of the acquisition of the remaining stake in Unitop, leading to 100% ownership. As we move forward, our strategic intent remains to seamlessly integrate both Unitop and Tristar into our operations. We believe this move will drive growth and enhance our overall competitiveness. Whilst our recent organic performance has been tempered, our commitment to growth remains intact. Our approach to growth includes both seeding new businesses and strengthening our presence with existing segments. Central to this strategy is our focus on developing innovative, sustainable solutions across all our business verticals. In our HPPC division, our R&D team has made remarkable strides in creating morpholine-based derivatives, serving as integral components for pharma API and a diverse range of other industries. In addition, we have made significant progress in devising innovative solutions tailored to the institutional chemical needs of the Indian Railways. In the AHN division, our R&D team is actively designing smart, sustainable aquaculture solutions that are tailored to meet the specific needs of farmers. These state-of-the-art solutions span a wide spectrum of areas from probiotics, feed additives to disinfectants and comprehensive pond management. Overall, R&D continues to be a cornerstone of our growth strategy and plays an important role in the company's future roadmap. Our confidence in customized products as a differentiator is backed by our track record in developing unique and innovative solutions for our customers. As the market landscape continues to evolve, we see our emphasis on R&D and customized solutions as an important pillar in maintaining consistent growth in a volatile environment. To conclude, despite the macroeconomic challenges, we remain optimistic about the remainder of the year. We firmly believe that our strategic initiatives focused on broadening our customer base, prioritizing high-margin segments, along with our commitment to R&D, position us favorably for delivering healthy operational and financial performance in the coming years. With this, I would like to conclude my address, and I now hand it over to Mr. Ketan for his comments.
Thank you, Edward sir, and good afternoon, everyone. At the outset, I would just like to inform everyone on the call that Mr. Chari, due to some unplanned exigencies, is traveling. He's there on the call with us today, and he would interact based on his connectivity. So my apologies for this. Let me update you about the two key developments during this quarter. One, of course, as Edward sir said, we acquired the 16% stake in Tristar Intermediates Private Limited for an aggregate consideration of 16.9 crores from the existing shareholders. Post this, the entire 100% stake now has been acquired. Second, as part of our digitization initiative, we have successfully transitioned to SAP S/4HANA across the group. We went live across all 6 group companies and multiple locations. This digital transformation required a planned shutdown for a week in April, followed by we had about another week set aside for the system stabilization. I'm happy to inform you that the transition has been executed seamlessly and the new ERP system is operating smoothly. This planned migration led to a slight lower sales in the month of April due to the necessary downtime. Now let me provide you with a brief overview on the financial performance for the quarter ended June 30th, 2023. So despite the challenging global environment, the quarter's performance remained steady. The company achieved a revenue of 410.6 crore for the quarter compared to 406.5 crores in Q4 FY23 and 434.7 crores in Q1 FY23. EBITDA stood at rupees 57.7 crores as against 54.6 crores in Q4 FY23 and 57.8 crores in Q1 FY23. PAT during the quarter stood at 29.2 crores as against 29 crores in Q4 FY23 and 28.7 crores in Q1 FY23. Despite the challenges and the difficult conditions, we were able to improve our EBITDA margins by 14.1% to 14.1%, up about 70 bps quarter-on-quarter and about 80 bps YoY. Our focus on prioritizing products with higher margins and our tight control on costs have contributed to enhancing our margin performance during the quarter. In the HPPC segment, performance was stable even amidst softer demand from key domestic industries. The introduction and contribution of new products supported the performance. Meanwhile, in the textile chemical division segment, the segment was steady, though growth was muted due to significant inventory destocking witnessed in the global markets. In the HN segment, we exhibited a decrease quarter-on-quarter, but YoY there was a growth. Given that the first 4 to 5 months are typically softer for the poultry industry, we have seen this trend quarter-on-quarter. However, we are confident that revenues will pick up through the year, and we expect this segment to show a good growth during the current year. We are also happy to share that ICRA has assigned AA- stable on the fund-based term loan and fund-based working capital facilities and A1+ on the short-term non-fund-based limits. These ratings are a testament to our robust financial position and strategic growth initiatives. In closing, I would like to state that we remain dedicated to our strategic growth initiatives, consistently driving innovation and improving operational efficiency. We are confident that these initiatives, coupled with our disciplined financial management and investment in our people, will enable us to deliver sustainable growth in the coming years. On that note, I would like to end my opening remarks and would request the moderator to open the forum for any questions that you may have. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sanjesh Jain from ICICI Securities. Please go ahead.
Good afternoon, sir. Thanks for taking my question. I got a few of them. First on this pharma API, which we mentioned in the opening remark that one of the chemical line we are entering will also allow us to get into pharma API. Can you elaborate slightly more deeply in terms of how do you want to look at the pharma API? What are the products we are looking at it? Where does it fit in the value chain for us?
Yeah, thank you, Sanjesh. Actually, what we've done is we had an opportunity in the viscose manufacturing. So you know that we are also dealing in spin finishes for viscose, and there is a product, modified cellulose, which is called lyocell, and a solvent that is used there, which is NMMO, N-methyl morpholine oxide. So we had developed, in the last year, we had started to develop this product, and since this morpholine chemistry had other opportunities, we also developed other chemicals like HEM, that is hydroxyethyl morpholine, or N-formyl morpholine, or N-methyl morpholine. So these are the 3 or 4 products that we have been targeting, out of which NMMO is a big product which goes into lyocell worldwide, and the potential for this product is pretty large, and there are not very many players whose products are approved here. So we have got approvals for this product with some major multinational manufacturers, as well as from the local manufacturer of lyocell in India. And therefore, as an extension to the NMMO, we also ventured into the same chemistry with HEM, NMM, as well as NFM. So out of which HEM is a molecule which is used in the manufacture of drugs for kidney transplants and heart diseases. So that's how this new chemistry was added to our portfolio.
When we say API, this is just one molecule, right? We are getting into an intermediate, or we are getting into an API?
No, it will be an intermediate. Actually, it must be a misnomer there. It's an intermediate for the drugs, actually.
Okay. And who else produces this product today in India?
That is my actually pharma technical team will be able to tell, but I can share that information with you on the side.
Got it. Thanks for that. Second, on the HPPC consumer side of the business, which is anti-repository and other white label manufacturing we do, how has been the consumer trend? Because if you look at the FMCG company, volume growth remains steady, while for us, if you look at the performance, it's still not catching up. What is the expectation for this year in the HPPC category?
So the HPPC category has actually done very well for us in the last year. Unfortunately, because of the softening of the raw material prices, the selling prices have come down. And therefore, you see a dip in the HPPC revenues. But if you actually see the HPPC volumes, we have almost 19% increase in volumes year on year. So that is a very healthy trend for us overall. And in the ARD also, we have a very healthy volume increase. It was only because of the price correction that happened that you see a small decrease in the HPPC sales.
But again, that volume growth is not showing in the gross profit growth as well, because if I look at the gross profit for the standalone business, it has grown by 11%, while there is a tailwind of lower raw material prices in the margin. Is that the new business what we are doing is a margin dilutive versus what we were doing last year?
So you will see a gross profit increase of only 11%, but if you see the EBITDA margins, because of the volumes that we have incorporated and the fixed cost coming down, the EBITDA margins have grown dramatically in the standalone, say from 27 crores to 35 crores.
Got it. No, I was just looking at the prices and the volume that this EBITDA captures a lot of operating leverage. The other question is on the...
The volumes have gone up, therefore we are able to reduce the cost for these products.
Got it. Next, on the Buzil side of it, I was just going through your annual report. It appears that Buzil Rossari Private Limited's revenue in FY23 has declined from 85 crore to 79 crore, while we were anticipating a very strong growth in the Buzil Rossari Private Limited. What's transpiring there? Why there has been a revenue, EBITDA and PAT decline last year in the Buzil Rossari?
So I will ask Ketan to explain.
So, Sanjesh, on the BRPL front, last year we started off with a new line of business which was into tender, the government tender business, where we supply the cleaning products to the large government schools and these government contracts. Now these tenders, we realized that we were unable to do it through Buzil Rossari because of certain conditions in the tender documents with respect to the net worth and minimum sales and things like that. So all that part of the sales and the business was routed through Rossari. So that's why you will see that the growth which we were expecting or planned in BRPL, part of that could not happen, is actually not visible in the BRPL numbers because they have come in the Rossari number. But generally for our internal MIS, we always show that as a BRPL sales because it's generated by the BRPL team. So that's
why. How much was it last year compared to 85 crores of 22?
Last year this was about I think about 20 to 25 crores of sales which was done through Rossari.
Okay, so we have done almost 100 crores versus 85 crore in 22.
100 crores is what we talk about last year's sales of Buzil.
Fair enough. The last two questions, one on the TriStar, how has been the trend? Have we seen any slowdown? Because I think Europe market generally is very weak and TriStar had a larger presence there. That's number one. Number two is bookkeeping portion. The depreciation quarter on quarter has declined from 16 crores to 14 crores. Anything there? Why has it changed?
Yes.
TriStar, yes, you are right. We are seeing some pressures from the European market. But I think this quarter should be a better quarter for us. In fact, June was also good for us in TriStar. So we are not really much worried on the TriStar front because we expect, in spite of April, May being a little soft, we are seeing a good traction in TriStar. So overall, on an annualized basis, we are quite good on the TriStar front. We should see good numbers coming in through the year. And on your second was on depreciation. So last year, Q4 being the last quarter, some of the asset adjustments in terms of accelerated depreciation, etc., we had taken on some of our older assets at Silvassa, and I think some also in Dahej, the unit of facility in Dahej. So those accelerated depreciation impact had come in the quarter 4. So that's what impacted, resulted in a higher depreciation rate last year. I think now, and of course, since we follow the WDV method of depreciation, the rates will be lower quarter on quarter. But I think now the current rates of about 14 crores is a more consistent rate that will be there on a quarterly basis.
Fair enough. Just one last question. Any update on the FY24 guidance? Anything which we think is doable in terms of top line, EBITDA and PAT?
Yeah, so top line, I think we should be at about low double digit, 12 to 14% is what we still think we'll be able to achieve, at least post the Q1 performance.
And EBITDA margin?
It will be on the similar lines.
14-15%.
Yeah, we would be happy if we can do around 14%. Would be a good target for us.
Got it. That's it from my side. Thank you for answering all the questions and best of luck for the coming quarters.
Thank you, Sanjay.
Thank you.
Thank you, sir.
Yes. Ladies and gentlemen, if you wish to ask a question, you may please press star and 1. The next question is from the line of Ankur Periwal from Axis Capital. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. First question on the segmental growth here for the quarter. If you can help us, break it up into volume and realization. You did mention, on the standalone basis, we are seeing a double-digit growth. But is there a significant slowdown on the subsidy side? Because, there is a EBITDA revenue both degrowth on a year-on-year basis.
I think I'll talk more from the consolidated basis because as we indicated that it's better to look at the numbers on a console because now a lot of the sales, happens on an intercompany basis where all the new businesses that are coming in into Unitalk, Tristar are being done through Rossari. So if you see on a overall consolidated basis, I think we've seen good volume traction, and that's quite heartening for us. Even though some of that growth has not come, the similar kind of growth is not being seen on the top line because of the RM price softening, resulting in some price corrections at our end. But if you see year on year, I think we've done about 20% kind of volume growth, and I think that's what is important for us. Our top line has been is down about 6% on a consolidated basis. I think that's more to do with the pricing part.
Sure, if I heard you right, 20% volume growth year on year across all the segments.
Yes.
Okay, and broadly, if you can give a...
Sorry, Ankur, not all the segments. I am giving an overall number of...
Yeah. So if you can broadly highlight which are the leading ones here, how was the growth in HPPC, for example?
And textile was almost stagnant in terms of volumes.
Very small volume. Textile very high volume.
Okay. So, and given the share, I believe HPPC would have grown much faster there.
Yes.
Sure. Also referring to, the earlier discussion which came on the operating leverage side. So if you look at the console side, the EBITDA or the gross profit are largely flattish, despite the volumetric increase. Is there some RM inflation which is yet to be passed on, or, how's the margin situation there?
Sir, the RM prices in the last 2 weeks have started to have an uptick again. So we are not really sure how we will be passing on the price or whether there will be an increase in price. So most commodities have started going upwards. If you look at styrene, if you look at butyl acrylate, if you look at formic acid, acetic acid, all of them have started are showing an upward trend in the last 2 weeks. So we'll really not be able to give you a guidance on whether more price correction will come or there will be a price increase. More so because the HPPC, the price correction or increase comes quickly, because it is passed on immediately to the customer.
Correct. So just presuming the same, let's say the RM inflationary scenario is what it is at today, prices, are we expecting our margins to be largely stable or probably, some pass-through happening there? So should things improve there since volumetric growth has started coming back?
Ankurji, our strategy is to actually fill our capacity, basically. Therefore, we're not looking at a very high growth in, margins. But we would like to keep the margins stable, but fill capacity, and therefore cost will come down and help us boost our EBITDA margins.
Sure, sir. Just lastly, on the new product launches, which you highlighted and pretty healthy growth in AHN this quarter, how should one look at, the product launches and the margin profile here? Will the focus still be on, volume metrics, capacity utilization and volume growth here, and probably the margin may take a beating in the near term?
Sir, for the new products, there will always be a higher margin idea. So there's not going to be volume growth. We are not going to run out the volumes over there. So all the new products based on morpholine or the new products introduced in aqua, they will have healthy margins for us, and then we will build the brand and the business there. Whereas the HPPC business is the biggest engine, I would say the fastest engine for us to fill in capacities, So that's where we will focus to fill capacities with the HPPC products. Whereas with the new products that come in, we are not using a strategy of low price. It will be always at a healthy margin.
Okay. Great, sir. That's helpful. Thank you and all the best.
Thank you, Ankur.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Aditya Chedda from InCred Asset Management. Please go ahead.
If you could help us
Sorry to interrupt, but the line for you is breaking up in between.
Yeah, hello.
This is much better, sir. Thank you.
Yeah. So, my question was again related to the raw materials. What is the previous long-term trends? Do you feel that those have normalized more or less, or if you could sort of guide us from a more medium to long-term perspective as to how much realization degrowth is possible if you compare some long-term trends, and also if you could help us understand the quarterly run rate of the subsidiaries, and if you can quantify the intercompany sales which we are doing right now. If you can quantify them, just so that we can understand the performance better, at least for now.
So, I think RM prices, currently are, more or less steady, but as Edward sir said sometime back, last 2-3 weeks, we are again seeing some hardening in the prices. So we'll have to take this, as it comes, because it's a little difficult for us to currently understand how the prices are going to pan out. But we are generally not taking very long-term positions on the raw materials. So I think we will be in a much better position to handle the pricing, whichever side it moves out. Again so your second question was on the intercompany sales. I think, as I said, it's better to look at the numbers on a complete consolidated basis, because now a lot of the sales are actually happening across companies depending on the want of the customers and the development of products and certain parts of the products which are happening in different plant locations of various group companies. So the ideal way would be to look at the numbers on a holistic basis. And you had anything else also, Aditya? Sorry? Your voice is cracking.
That's it from my end.
Yeah, thank you. Okay.
Thank you. The next question is from the line of Rohit Nagraj from Centrum Broking. Please go ahead.
Yeah, thanks for the opportunity. So my first question is on the Unitop side. So from Unitop, we serve predominantly the agrochemicals and oil and gas. And from the agrochemical companies, we have seen a very muted commentary. So was there any impact during Q1 on the agrochemical side? And how has been it looking like in the foreseeable future, given the demand or the POs that we are receiving? Thank you.
So in the Unitop side, this quarter, I think we've seen a good demand. The only thing that impacted slightly on the Unitop sales was we had about 8-10 days of complete shutdown on the dispatches early in April because of the SAP implementation. So that actually impacted more on the Unitop side, because it took us some time for us to consolidate and go live on the system there. But post that, I think we've seen a good demand, and I think even July has been a good month for us in Unitop. So the capacity utilization at Unitop, I could say in the last 3 months, including July, has been significantly good. So it's been at about 85-90% plus utilization of the capacity. So for us, at least in terms of the orders and the POs, it has been good for the last 3 months at least.
And Rohit, to add to that, actually in Unitop, because of the synergies between Rossari, VRPL, Romac and Unitop, as well as TriStar, a lot of non-agro surfactants have also been, sales for demand for non-agro surfactants have been generated by the group, and we are looking at pending orders this month. It's pending orders in excess of 2,000 tons. So we are seeing that Unitop is doing pretty well for us, and I'm sure this quarter also will be strong for Unitop.
Right, so got it. The second question is from the export side. So how has been the performance during Q1 and what are we hearing? Because generally for the chemical companies, exports have been dampener over the last few quarters. So what is our feedback on the same? Thank you.
So exports, this quarter we've done about 80 crores of exports. Roughly about 20% of our turnover is on the export side. Partly you're right, we've not seen the growth coming in. Last quarter also we were at 80. Last year we were at about 85-ish. So we've not seen the traction there. So it's more, I think, impacted from the textiles slowdown. So even on the export side, a lot of the countries where we used to export, we've become rather more cautious because many of these countries like Bangladesh, Egypt, etc. There are issues on the payment side in terms of forex, and we are quite cautious on the customers that we are dealing with. We don't want any of our funds to get kind of stuck there. There are headwinds in Europe and US also in the textile space, and we expect at least the next 2 quarters also to be slightly sluggish. We may not see growth coming in, but we would be happy if we can maintain the current run rate. Maybe post that we'll see some inventory use up in the textile space, and then we can see the export turnover in textiles also going up, and then the overall turnover on the export side should also grow.
Sure. Thank you so much and best of luck, sir.
Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may please press star and 1. Participants, to ask a question, you may press star and 1 at this time. To ask a question, ladies and gentlemen, please press star 1. As there are no further questions, I would now like to hand the conference over to the management for closing comments. Over to you, sir.
Thank you, everyone. I hope we have been able to answer all your questions satisfactorily. Should you need any further clarifications or would like to know more about the company, please feel free to contact our team or CDR India. Thank you once again for taking the time to join us, and have a very good evening. Bye.
Thank you. On behalf of Rossari Biotech Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.